Hey everyone, in this video I'm going to compare Penn National Gaming or Penn Entertainment with DraftKings and answer which one of these two gaming stocks is the best one to buy right now. So to answer this question, I'm going to look at revenue, profits, cash flow, and valuation. So let's jump right in, starting with revenue. And what you'll notice over the last 3 years is DraftKings has demonstrated excellent growth here from less than 1 billion in revenue all the way up to 3 billion in revenue over the trailing 12 months. And similarly, Penn Entertainment demonstrating nice revenue growth at 6.559 billion in the most recent trailing 12 months. Penn and DraftKings have made acquisitions of late that has added to their revenue tallies. Interestingly, Penn has that brick and mortar presence with the live gaming casinos, whereas DraftKings does not have that. It's completely mobile sportsbook, mobile gaming, and fantasy sports. Penn also is expanding into mobile gaming. Recently, you may have heard a deal it struck with Disney's ESPN, and so it too is expanding into mobile gaming, but it does have that brick and mortar presence that's generating strong profits that can support that growth in investments in mobile gaming, whereas DraftKings does not have that. So that is evident in these companies' operating profitability. You'll notice Penn is positive 13.76 operating profit margin in the trailing 12 months. DraftKings, while improving, is still negative at 38.18%. But like I often say on my channel, I like when companies are making progress towards profitability, even if their current profit margins are negative. And with DraftKings, I'm especially optimistic about its profitability because of the spending it does in the new markets it enters. So DraftKings, of course, I already mentioned, is a gaming company. So every time it wants to gain access into a new state, it has to get approval from the legislature. And then once it gets approved to operate in a market, DraftKings undertakes a massive marketing campaign to let people in the state know that, hey, look, we're available now in your state. And so these are one-time expenses that I don't expect DraftKings to do again in the same state. So yes, they will do it again because they've got a lot of states to go. They're still around roughly 20 states for mobile sportsbook, and only around 5 states they're available in iGaming. And so they will need to do that again for the new states, but not the existing states. So once they expand to the level they expect to be at reach equilibrium, they're not going to invest those marketing campaigns again. Interestingly, Penn has been saying for a while now that they're not investing as aggressively as the other mobile gaming companies are. They've taken a more disciplined strategy, although now that deal with ESPN, that kind of throws that caution to the wind. It seems like they gave up a lucrative agreement to Disney in order to get that right to have ESPN, to partner with ESPN. So interestingly, we'll see if Penn's mobile gaming strategy turns more aggressive now that they made that deal with ESPN. The next thing I wanted to look at is cash flow from operations, and Penn again solidly positive here, 765 million in trailing 12-month cash flows. DraftKings negative again at 315 million, and not showing that same kind of improvement as they are in terms of economies and scale, making progress to be positive in cash from operations as they are in operating profit margin. And finally, I wanted to look at valuation, and Penn Entertainment is significantly cheaper than DraftKings. DraftKings is trading at a forward price to sales of 3.4, almost 7 times as expensive as Penn at 0.532. And given that Penn is also investing in mobile gaming, but it also has that local casino presence that's generating profits and cash flow to support that investment in mobile gaming. If I was to pick one of these two to buy today, I would buy Penn Entertainment stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.